Good morning, children. Today we will be going into accounting treatment for a complete question of cash flow statement. I hope the previous class format which I have discussed with you, you have taken care, you have noted it down in copy, which I especially requested you to do. And having this hope that you all have done that format in your copy and also understood it, I'm proceeding with one of the illustration given in your textbook so that you can also see that in your textbook also. A full question how to prepare a cash flow statement. This discussion previous class about the three activities and all the headings and subheadings was already done. Today I will first explain you the question. If you see this question says prepare cash flow statement from the balance sheet of Liva Limited as at 31st March 2020. Your question has particulars column in balance sheet, note number column in balance sheet, then the amount column with current year 2020 and previous year 2019. I repeat, current year is 2020, previous year is 2019. In some of the questions, they can reverse it. They can give you previous year here and the current year may come in the outer column. So you have to be very careful. Why? Because whenever you are seeing the increase and decrease, it is always current year minus previous year. So children, be careful, otherwise you may make a mistake. The first heading in the balance sheet is equity and liabilities, which gives you shareholders fund. And in this question, under shareholder fund, we have two headings, share capital and reserves and surplus. Then point number two, non-current liabilities, which is telling us long-term borrowings. Point number three, current liabilities, which is giving us one example, trade payables. And then the total has been mentioned for both years 2019 and 2020. Here is where liability side is ending. Now we are going into Roman 2, which is assets. First is the list of non-current assets. Under this there are subheads, fixed assets, and number B, non-current investments. Then point number 2, current assets. This has four subheadings: A, current investment; B, inventories; C, trade receivables; D, cash and cash equivalents. Then this note number one, which will always be a part of a question, you will have to refer the notes to accounts, which is part of a question. So this one point is mentioned here as number one, reserves and surplus. That is surplus in balance of statement of profit and loss. And this is previous year profit, 2019 profit. And this is current year profit, 1,32,000. Children, by default, this is profit and this is a credit balance. But suppose it's written here debit in bracket with profit and loss, they write down DR, then this becomes loss. So by default, it is credit balance. If mentioned debit, it is loss. This is a question. Now, I hope you all remember that when I have started this chapter, I've discussed with you that this point number two, non current liability, is an area of financing activity. Similarly, share capital is an area of financing activity. This share capital is your area of financing activity. That should be very clear. Reserves and surplus always gives you net profit in your notes to account. So this should be the first writing under operating activity. Current liabilities, you all know it is an area of operating activity which we do after we have done operating profit before working capital changes. Non-current assets is an area of investing activity. I beg your pardon. Non-current assets is an area of investing activity. And finally, current asset is an area of operating activity. This is how question should be first understood before you start writing. This cash and cash equivalent is not a part of any of the activity. It is neither operating activity, it is neither financing nor investing. It does not go anywhere else. We have seen in the previous class where we discussed format that it is under point number 5. That means cash and cash equivalents in the beginning of the year. So beginning of the year means previous year. And when you end your cash flow statement, it is cash and cash equivalents at the end of the year, that is current year. So this is how the description of question goes. You must understand this before we go into solution. Now, how will you approach this question for your solution? First of all, make at least 1.5 page format in your copy, giving it a heading cash flow statement for the year ended 31st March 2020. You see here, cash flow statement for the year ended 31st March 2020. This is your current year, and this is the company's name, Lever Limited. Children, I am very sure that you have written down the subheadings which I taught you last class. So, my way of teaching is that first you make a format of 1.5 page, start from the left page starting line and till the first few lines of your right page, and make this format, write down particulars, make one column inside here and then the final column, amount column outside, two columns for amount as we discussed. Write down point number A. I will suggest write down Roman 1 because that is what we discussed in the previous class. Instead of A, B, C, D, you can also take Roman 1, 2, 3, 4, 5, 6 because that is how we learn. So I'll go with this solution. Point number A, cash flow from operating activities. Leave at least 10 lines in between. Give a gap of 10 line. Write down point number B, cash flow from investing activities. Leave at least 3 to 4 lines blank. Then write down point number C, cash flow from financing activities. Again, leave 2 3 lines blank. Point number D, net increase in cash and cash equivalent from A plus B plus C. And then leave 2 lines in between and write down point number E, closing cash and cash equivalents. That means cash and cash equivalent at the end of the year, and this was cash and cash equivalent in the beginning of the year. So what we have learned in our format previous class was point number 1, Roman 1, Roman 2, Roman 3, Roman 4, Roman 5, here add Roman 5, and this was Roman 6. I hope you recall that. Once you are done with this format, you know where things will be placed from the question, that is a balance sheet. So let's go back to our question. We go to the question and we will pick up things one by one and put it at the right place. Be very careful, children. So what is here? The first thing which comes in the question is share capital. Share capital previous year it is 1,80,000. Current year it is 2,10,000. So there is an increase because the formula is current year minus previous year. So it is increasing by 30,000. Increase in share capital, as we have done it in online class, it is due to issue of shares. So it has to go to financing activity. Financing activity, you have already written the heading here. We can write proceeds from issue of shares 30,000 in the inner column. I hope this is understood. Now let's go back to the question. The next thing was reserves and surplus, which is having a note number. So we go to note number. Here is notes to accounts. Previous year 24,000, current year it is 1,32,000. So current year minus previous year is the net profit during the year. So we'll subtract 1,32,000 minus 24,000. And where is it written? It is written as the first heading for operating activity. Net profit for the year 1,32,000 minus 24, that is 1,08,000. You may directly write down 1,08,000, children. There is no need of writing this 132 and 24. This you may show it here in bracket or you may not show it, but directly you can write 1,08,000 net profit. So two element of your question is clear. Under shareholder fund, both the things have gone to cash flow statement at the right place. Now we go back with the question. The point number 2 says non-current liabilities. Under non-current liability, the example given here is long-term borrowings. That means loans. Previous year, long-term loan was 1,50,000. Current year, long-term loan is again 1,50,000. No change. Since there is no change, so that means there is no inflow or outflow of cash under long-term borrowings. It remains the same. So there is no effect on cash flow statement. Next is point number 3, current liabilities. Current liability, trade payables. Previous year current liability trade payable is 27,000 and current year it is 75,000. So you may see there is an increase from 27 to 75,000 in trade payables, which is a current liability. Now, children, where is current liability shown? It is under operating profit, and here is the place either we add it or subtract it because it was increasing. So, 75 minus 27, the increase in current liability is to be added, and the amount is 1 lakh, sorry, 48,000. 48,000 is added. Added to what? The previous amount of 1 lakh 48,000. I hope this is clear. So after the adjustment of trade payable, which is a current liability, we now move to assets. Under assets, number one, non-current assets. Under non-current asset, we are going into fixed assets, tangible assets. So tangible fixed asset is given previous year 2,52,000 and current year it is 2,94,000. Again, there is an increase from previous to current year. You see that? And I have told you in online class that an increase in fixed asset or non-current asset is due to its purchases made during the year. And I will also show you here non-current investment, which is also 18,000 previous year and current year 48,000. So both these non-current asset, tangible as well as investment, they are increasing, and the increase is due to the purchases of these assets during the accounting year, and any purchase of non-current asset results into outflow of cash. This I have already taught you. Outflow of cash means you will go to investing activity first, then because it is outflow of cash, money will be going out, so we have to subtract it. Purchase of tangible assets 42,000 in bracket. You will not put minus sign, this will be in bracket because it is subtracted. Same for purchase of non-current investments in bracket 30,000, and there is no other investing activity, so we will finally add up these to 42,000 and 30, both are negative, adds up to 72,000. And since this is a negative figure, so it is cash used in investing activities. We have actually calculated the final amount of investing activities. Now let's go back to the question. Non-current asset was finished. We have posted it in cash flow statement. Now the last category, current assets. The first one is current investment. Children, current investment, you remember, it is a part of cash and cash equivalent. So this will not go in any of the activity. This will be added with cash and cash equivalent. So we are skipping this. Inventories previous year it is 24,000, current year it is 1,07,000. An increase in inventory will always be subtracted in operating activity. Similarly, trade payables. Previous year it is 17,500, current year it is 40,000. Both these current assets are increasing. An increase in current asset is to be subtracted in operating activity at a fixed place. Come here. Let's see this point. Less increase in current assets, inventories 83,000, trade receivables 22,500. In fact, both these amounts should be in bracket, just like it is put bracket here, because these are subtracted. So this amount is also being subtracted. So we should put bracket sign here, 83,000 in bracket, 22,500 in bracket, and then finally the total of 83 and 22,500, 1,05,000. This should also be in bracket. So bracket is missing in your textbook solution. You should put all these three amount in bracket because it is a negative figure. Now we move to the last thing of our question, which was cash and cash equivalents. Previous year cash and cash equivalent is 9,500 and current year it is 24,000. But 9,500 plus this 60,000 current investment. I've told you current investment being marketable securities will always be added with cash and cash equivalent. So for the previous year 60,000 plus 9,500, it will be 69,500. Let's go to the solution. This is always shown under point number 5, which is add opening cash and cash equivalent. It is better if you write cash and cash equivalent in the beginning of the year. And here is 69,500. I will suggest you will write inside here current investment 60,000 and your cash and cash equivalent 9,500. Individually you write here, and then the total comes here 69,500. Hope this is clear. Now everything has been posted. Let us go back to our operating activity. 1,32,000 is our previous current year profit, and previous year profit was 24, so directly you can write 1,08,000. There is no non-cash items and non-operating expenses or non-operating income. So whatever is your net profit 1,08,000, it is also your operating profit before working capital changes. So net profit and operating profit is same. Then we have adjusted current assets and liabilities. This was your current liability trade payable 48,000 which was added, and then we subtract 1,05,000. When we subtract 1,05,000 from 156, we arrive at 50,500. This is a positive figure, and this is your final answer for cash flow from operating activities. So cash flow from operating activities comes rupees 50,500. Investing activity, we have already discussed, this is minus 72,000. Financing activity, it is 30,000 plus. Now, you should take care that in between these three activities amount, there should be no line in between. That is why the individual amounts are written inside. Now we need to add these three: 50,500 minus 72,000 plus 13,000. The total comes as 8,500, and this is your point number 4 or D, net increase in cash and cash equivalent from A plus B plus C, that means operating activity plus investing activity and financing activity, 8,500. And we have already written add cash and cash equivalents in the beginning of the year, 69,500. This two amount is added, 8,500 and 69,500. It adds up to 78,000. This is your final amount of cash flow statement. Close it with double line. There should be double line to close it, and here you will write cash and cash equivalents at the end of the year, that is current year. Once you are done with it, you need to match and tally this 78,000 with your question cash and cash equivalent of current year. So let us come to cash and cash equivalent. Current year 24,000 plus your current investment 54. Now children, 54,000 current investment plus 24,000 cash and cash equivalent. When you add it, it becomes 78,000. So in your solution, your final total is 78,000, and I will suggest you write here inside 54,000 for current investment and 24,000 for cash and cash equivalent. When this matches with your closing cash and cash equivalent in your question, that means question has been correctly done. So this is how one good question to start with. First question which we have discussed for cash flow statement as an accounting treatment. So today you're going to solve this question on your own and also pick up few more examples without adjustments given in your illustrations to have command over the beginning of practicing cash flow statement. I hope you have understood. So that brings an end to our today's class. Please take care of every area which I have talked about in this video with your textbook illustration only, and keep practicing. Have a very nice day. Take care. God bless you all.